Welcome traders. So it is Monday the 22nd of April. It is a beautiful day. I just feel like we've had an inordinate amount of rain so far this year. So very quickly, just kicking off while I'm actually back in the UK very briefly, I want to have a look at the economic calendar. So first of all, really focusing this week, I think on UK PMI data. I want to see how that is turning out. You know, with the markets correcting, which is normal, and we've been waiting for it for a while, you know, there's going to be a lot of, I think, unnecessary focus at this time. Premature on the US figures. I'm not really highlighting those. Also, one more thing is I also think post Russia invading Ukraine, I think both the EU and the US have decided to really work on their oil production independence and energy independence. And I think that they've come a long way to doing that. And so I don't really worry so much with war breakout with regards to crude oil at this time. I think that's one thing that potentially might actually historically might be changing now. Anyway, and then just focusing, perhaps curious to see what's going to happen with initial jobless claims, if there'll be an increase in that kind of thing. We'll see what happens there. And then also just what's going to happen with the BOJ's interest rate decision. You know, they've started a journey down a path, and I want to see how fast they kind of need to, you know, if they feel they're going at the right pace or if they need to accelerate things or not. So that's what I'm curious about. Right, so first off, let's go obviously straight to the charts. Let's have a look at the VIX. So the VIX has spiked a little bit, which again, something that we anticipate eventually that we're going to have that happen when the market gets a little bit on edge. But I think perspective is really important here. This is minor as far as I'm concerned. We were kind of there in October, and I'm not really concerned about this at this time. I really start to worry when it starts to head into sort of the 30s. At this time, for me, this is just a very normal response to a market correction. All right, so let's have a look at the dollar index. Dollar index obviously strengthening quite a bit, going up to the top of the range. From a monthly perspective, this actually makes sense to see that going up to the top of the range. So the question then becomes, if it's range bound, does it reject that level? Do we see it start to vacillate between those or oscillate between those levels and start to head lower? So this week might result in some kind of an attempt at a rejection. I find that interesting. If we have a look, for example, at euro dollar. Euro dollar is clearly on its way down to 1050 towards the bottom of the range. And will it get there within this week? Will we see a bit of a rejection of those levels? That kind of stuff I'm curious about. So for me, shorter term trading opportunities, it would be in the direction of the edges of the ranges so far. We'll look at sterling. Sterling as well, very strong rejection there. This is a nice momentum candle so far. So clearly now it's broken free, and I'd be looking for continued shorting opportunities with or in the direction of the trend here down towards those major support levels. So that looks good. Let's look at Aussie and the Kiwi against the dollar. You can see a very strong level of support. We put that about 0650. It's broken through that. Now it looks as though it's free to continue to head lower down towards 62.50, give or take. Kiwi dollar as well, also continuing down. I think that this has got that potential to head down towards the lows over here, which are the October-November lows. So all of that potential over there. Yeah, it's sitting at some daily support right now, but it should be able to break its way and continue down from here. And again, so dollar yen and all the yen crosses, the yen pairs look as though their trends are pretty comfortable. They're going to continue to push high. We've spoken about this in previous episodes, so this is why I pay attention to the BOJ. I don't think that ultimately this is really where they want it to go, but also they might change policies or modify stuff, or we'll see. And I'm curious to just see if they do drop any clues about that. But otherwise, the trend is still very much intact for that. Dollar Swissy, a little bit overextended here, so it's definitely had a really good run. If you look here again, Swissy pairs are on my watch list for the next quarter. I think there could be some really good opportunities here, but I do think it's a bit overextended. I'd love to see a bit of a pullback first before possibly down to the 50-period moving average or into these previous highs before resuming that trend. Dollar CAD, really nice, beautiful retracement. So looking for any bullish setups here to see if there's a trend continuation back up to the highs. A little bit of a rejection there, but not terrible. And overall, because of the stronger dollar, I would expect that to continue upwards. So again, could be some nice potential swing trading or day trading opportunities against the US dollar this week. Moving along and having a look at gold. So gold's nice and overextended. We can see a little bit of a bearish rejection candle forming now at a nice round number, 2,400. Is it overextended? Yes, it is. So this would be a really good time to see if it's enough of a rejection to cause a retracement. And if that's the case, then I think it's feasible to say that 2,250 is on the cards. We'll see if that's the case. It's a very nice strong monthly candle, and we're so close to the end of the month that gold might actually try and stay around this level so the candle closes nice and bullishly, and then we get a correction in the next month. We'll see if that's going to be the case. So definitely exercising some caution here. It's run out of steam. It is overextended. It is due for a correction. So the question is, will we get that this week? Silver as well, you can see also very much prepping for a correction to the downside. So this should have 26.20, maybe even down towards 26 in its sights as well. And again, it's a very similar type of thing here. So how the monthly closes for gold and silver could be significant. Most people would assume that it intends to stay bullish. Excuse me, and there's always a possibility that we finish with a strong rejection. It's a possibility. I'm keeping in mind that we have, this week should be the last week of it, and I think the monthly candle, it looks nice and healthy. It should finish nice and strong. I'm just saying that if we do end up with a rejection, a lot of people think that a market, a particular instrument can only go up or it can only go down, and then it changes direction, and they just kind of they struggle with that. So you always have to consider the possibility that it can, and then we'll find out why afterwards. Natural gas really trying to turn around now. Nice little bit of a tentative double bottom here, but no change in trend at this time. So nothing more to talk about that. I just included under energy, which is why I talk about it at all. Next up, so we've got a crude oil, also a very nice overdue retracement back into this area. So what I'm going to be looking for this week will be a bullish candle, a nice little bullish candle recovery. Could it go a little bit lower? Could it come down and tap 80? Absolutely. But this is a great area for it to turn around in. So I'm just going to mark that as this is the kind of, I'll do it like this and then say that's kind of what I'm looking for this week and see if we get that. The same for West Texas, really beautiful spot for it to be able to come back and produce a bullish setup. So off the previous highs, that's a great place to do it. So let's see if it does that. That could be interesting. So a couple of the charts so far are hinting at a potential kind of a turnaround, which would be, again, something I always be curious to see what could potentially cause that. All right, so here we go. We needed a really nice correction for this. I think this is potentially this is a good start. We've got a bullish engulfing candle here. It's quite a strong rejection of those lows. I think the weekly is really what's going to be the most important here. I think I've spoken about this in the past. The weekly is really going to be significant. Yes, this is a potential turning point to kind of, to be blunt, it is. There can often be a point where the bulls return to the market, but there aren't enough of them, so that you see the first signs of the buyers getting back into the market, but it's not enough to turn around. And so we can see an attempt. Here's an example on the daily, for example. Here was a correction, bullish candle, but just not enough. And then now we're back, we've got more buyers coming in. So you can get a second bullish candle, but now I'm talking specifically on the weekly. This is a really nice indecision candle at a key level support, and it's closed with some buyers in control. We've gapped up a little bit here. So this could turn out to be a very valid turning point. Remember, we are in a bull market, ladies and gentlemen. I know that some people struggle with that, but we are. And so in fact, what we have to do, so the reason I keep saying is we're in a bull market is that there's certain environments or conditions where or ecosystems, but let's call it seasons within the market, where you maintain okay, this makes sense. So all this behavior makes much more sense within a bull market. And also it means that we should be, if anything, the glass is kind of half full. So what happens is, or innocent or proven guilty. So you could just check, or you just choose whichever analogy or phrase you want to use in that one. So yes, it means that very well, we would very much due for a correction. Have we let off enough of the steam? This is a valid setup, but a further correction down to these levels would also be valid. The 50-period moving average on the weekly, back down to these previous highs, all of those would be perfectly valid. Okay, they'll be beautiful. And what I'm looking for, ladies and gentlemen, will be a bullish candle that I'll set up on the weekly, and that will be confirmation that the buyers are coming back in. So let's have a look at the S&P. I don't want to keep you here forever, but this is a really nice, decent correction. To me, this is a minimum correction. This is the bare minimum that the market should have corrected. I would prefer to see a deeper correction, but if it turns around from here, that is going to be acceptable. And also that means that, again, there's another clue that we might see a bit of a turnaround in the markets this week. So again, I would still prefer to see a bit of a deeper correction here. It is valid, but it is the minimum correction that I would have expected. However, actually one justification for why that might be okay is simply that if we really are in a very strong bull market, we will tend to get smaller corrections and bigger moves. Okay, yeah, you can see the Russell 2000 back in the range. That's okay, but it's in the kind of top half of the range. So it was a failed breakout, but it doesn't mean it's over just yet. The FTSE as well, trying to stay outside of the range. And above it, really nice, strong, bullish engulfing candles. So there's a lot of really cool stuff. There's a lot of positive signs there. The DAX doing a picture perfect pullback. This is where it gets interesting to me, is that we now have a very strong rejection here on the monthly so far. And again, the monthly here hinting at a potential deeper pullback, so that the DAX might want to pull back a little bit further. So what I want you to do is to keep in mind that yes, we could turn around here. We have met the minimum requirements for a normal market correction. However, I would prefer a deeper correction, something closer to 382 in many cases, or a 50% halfway pullback. All of that would be amazing. If we can get that, that's a really good thing. You shouldn't panic because the market will recover from that point onwards. So it's just breathing out and breathing in. That's perfectly normal. But it does represent some potential great buying opportunities. So here we go. Very nice. Coming back to retest this resistance. So we might get some markets pull back further and the rest might actually start to turn around. The Nikkei as well. Look at this. It really makes more sense to me that this would pull back into the moving averages around 35,250. But and we'll have to see if that's going to be the case. So a lot of these, it's great. I'm so happy that we have these, because when you're an investor and you're managing a stocks portfolio, you want to get in on those pullbacks. That's what you're looking for. You want to buy at a discount. The absolute worst thing you could do is buy when it's massively overpriced and overextended, which is, of course, the nightmare scenario that a lot of people can often find themselves in, and it's horrible. It's very frustrating. Okay. So I did a bit of analysis on Apple on investing.com, and I spoke about this particular weekly bullish candle, saying, look, was this a potential buy opportunity? And I actually stand by it. I would have preferred, though, one of the things I failed to do was to talk about how price needed to break the high of this to, in other words, follow through. So this is what I'm looking for. Yes, we've come down right. We're testing this level of support. Could we break low? Yes, we could. We could come back down towards 160, 156. We could come back down to that. But here's where it gets interesting. If we get another green candle, so there's another very strong bullish candle over here, to me, that would be another additional signal. So I'm waiting on that at the moment. And so we'll see if that's going to be the case. So again, for me, I stand by this. In fact, what I did was I placed an order, and I got filled near the highs, and I'm perfectly okay with that. For now, I'm okay with it. Yes, I want to see what happens with this level of support, and I'll reassess if we have to, because as I said, we might still be within a range, and therefore, if that is the case, if we are within a range, it's going to reverse here. So let's just kind of see how the rest of the week goes. Very nice weekly correction from Amazon, very nice and healthy at the highs here. So again, Amazon hinting here that it could do a pullback to 160 possibly, and that would still be, in my book, a very nice healthy move, pull back there and then continue back up to the highs. So there's some slightly mixed signals on some of these charts, but all of those, I think, are not, there's no dire situation that I'm aware of. And I know there's so much misinformation, disinformation out there, that the world is being driven paranoid and crazy by essentially right-wing media. So that is the primary culprit. And so just something to be aware of, maybe take a break from it, just take a bit of a breather from it. It is designed to agitate you and stress you out and remove your ability to think clearly. It is meant to do that. So please be aware of that. They don't provide solutions. They just talk about problems and how things are getting worse. And it's meant to agitate you. So just be aware of that. Okay. ARC Innovation has failed to get outside of the range right now, tanking back into the range. So be it. And I shouldn't say tanking so aggressively. I just mean it's very similar to what you've seen. It's heading back into the range. There we go. ASML, very nice correction. I love this. So we sort of identified loosely this danger zone, or that area where it might ultimately run out of steam. Pulling back into 800, very cool. Would be great to see that happen. Glencore, looking good. So not everything is correcting. We will get some companies that could do well during market corrections. We've got Tesco, also looks like that's held. We were looking for a bit of a pullback into this area and then to continue from there. It appears as though we're getting that forming. We've got Amex, very nice pullback. So Amex is doing fine. No real signs of exhaustion just yet. Doesn't mean it won't have a correction later on. Again, something I want to highlight here. Some of these charts are all doing their own thing, sort of independently. And that to me is another sign of an incredibly healthy market. I want you, just if you are watching this and you're not entirely, you don't buy into the idea that we're in a bull market and you're not, and the doom and gloom just seems like it's really heavy. I want you to think about something for a moment. There are always folks who years later into a bull market then accept reluctantly that we are in a bull market. And that we have been for many years. This is the kind of thing. So let's say 3 years from now, you're like, oh, I guess we really are in a bull market. But I must assure you that even then, there will be the doom and gloom articles. They will always be there. They really will. I mean, who knows why people do it, but they will be doing it. So I just think about that because it happens. It's part of the normal human sort of psychological cycles, and it is what happens. So please be aware of that. Just think about it. Berkshire Hathaway, double topping, coming back down. This could ultimately end up being in a range. Again, that monthly could do with a very healthy retracement. Not a big one. I mean, these things would recover within 2-3 months. And something I spoke about before, and I kind of want to keep an eye on the time, was, you know, are we getting a smaller correction now and then another correction later in the year? September sort of, then maybe kick off in November when Biden is re-elected. Will we see the market sort of respond at that time? We're going to have to see how that ultimately goes. And then if the market just responds and it calms down, it's like, okay, we're through that one little hurdle. We're going to have to see how that ultimately goes. Or are we going to go into a bit of a kind of a coma now until then? That's really where that's something that I want you to keep both those ideas, because we're going to have to kind of keep them. So that could mean that we get see the markets rise, but then come back down again, and rise and come back down again. So not so much fun anyway. Coca-Cola looks fine. That's a really nice bullish engulfing candle. Holding of support off the bouncing off those moving averages looks okay to me. BP double topping here, but again, that's crude oil. So no surprise again that crude oil is moving, but is not like, it's not on, no pun intended, it's not on fire or anything like that. It's not like it's an unstoppable machine. And then we have General Motors. General Motors looks beautiful to me on the weekly. Great place for it to come back and set up. So I'm very curious to see if we will get bullish candles by the end of the week. We don't have to, but it would be interesting to me. The only reason I hesitate is because the monthlies look as though a lot of them are getting ready to do at least one more month. So in other words, they're looking to possibly do May as a bit of a, which is that expression, sell in May and go away. So they're potentially looking for May to do a bit of a correction. We'll see if that's going to be the case. But JPM already setting up here with a bit of a bullish candle. So I'm cautiously optimistic that maybe some of them will kick off and some of them will do a deeper correction. We're going to have to see. Then we've got this is a very strong momentum candle, which usually means that this is the start of the move, which again brings me back down into this area. Okay. So that's fine. So we could have maybe a bit of May could be the turnaround month. So we might finish bearishly for April and then recover throughout May. It could happen. We'll see. Very nice strong move on Adidas. Really nice strong breakout. Otherwise, it's stalling a little bit, but it looks okay to me. It's above that 50-period moving average. Looks nice and healthy. I'm okay with that. Let's look at Meta. Meta running out of steam finally. So running out of steam. So again, what I'm going to be looking for here, guys, I'm going to be looking for that strong, big red bearish momentum candle. Here's our level of support. Will we get it? And will we get a pullback down towards that sort of below that 400 level area? Possibly even down towards these highs. That would be great. Let's see if that happens. Then we get Morgan Stanley. Trying to break through, just through this level, battling with it, but not giving up just yet. NVIDIA. So let's talk a little bit about NVIDIA. Beautiful, beautiful correction here. Really, really, really nice. Look at that monthly correction as well. So if I already own NVIDIA, which I do, I would stay in it. But I would be preparing for buying opportunities down here towards 600. Could it go lower? It could go down to 490. Could it go down below that? It's possible, but that's the least likely. It's not impossible. It's just the least likely option. Most likely for a healthy pullback, 600. A little bit further would still be considered relatively healthy, 500. That could be a really good buying opportunity. So looking forward to that. Netflix, nice strong correction, normal and healthy, back down to 500. That looks good. So again, a lot of these are, this is them just letting off quite a bit of steam. Okay, it's much needed, guys. We've been talking about it on this channel for a while. So it's not a surprise to me anyway, and it shouldn't be a surprise to you. Spotify, that's interesting. That's quite a steep correction. Excuse me, at this major level of resistance, we might see a bit of a deeper pullback. 220 into this area could be a nice one there. These are just nice little trade setups there. That's a nice little 3-to-1 on that one or more. Okay, let's have a look at Spider. Okay, so Spider's having a relatively deep correction over here, and it's kind of just managed to break a little bit out of this range. So this is also a bit of a range similar to what we see with ARC. So that's curious to me. It might just find its way back down to the bottom of the range. We'll see. FedEx, good area for it to find some support. So that could be interesting next week. Let's have a look at Tesla. Tesla's got their earnings report coming out. I don't know why I had the 17th. That was what that was where it showed up on my calendar, but now they're coming out tomorrow night, which means Tuesday night. So we'll really see the damage on Wednesday. I know that there's a lot of, I don't want, look, there's so much article and so much analysis going on fundamental. I'm going to provide purely technical at this time. I want to say that essentially, this is kind of the last, so if we go and have a look at it from a weekly perspective, this is that sort of last level of support. We've started to break through that, which now means these previous lows around that 100, 110 mark are now available. Like there's no more support between here and there. So that means that there is a very fair possibility that we could see the market head down towards those lows. I could have a discussion about it. There's a lot of stuff, and I'm not going to do that. But I did want to say just one more observation, and it's a subjective observation. But it seems to me now that essentially that Elon is very upset that his 55 billion bonus was taken away from him. And I think now he's primarily motivated to get that no matter, and actually nothing else matters. So I kind of feel that all the cuts he's making, all the different things are not in any way is he going to reduce his bonus package. He's like, nope, other people can lose their jobs. We can do all this kind of thing, but I'm still getting that. And I think that's a primary motivation now. Whereas I think that before he was a billionaire, I think he really had grand ideas, whereas now I kind of feel like he's chasing the money more than anything else. But that was the only thing I want to add on that. I'll move on to it. And again, it was very subjective and I could be wrong, but he's making it kind of clear that he wants that back on the table again. So, okay, let's have a look. So we talk about Vanguard. Very nice correction, guys. Let me show you why this is beautiful and healthy. Just look at that behavior all the way up there. It always drops faster than it climbs, so that's very normal. And this is a great area for it to organically find kind of support here. Think of the moving averages as organic trend lines. Great place for it to find some support, but also coming down to previous highs is also acceptable. And if ever you're kind of not sure about that, well, Fibonacci usually will talk to you about a 382 to 50% those will usually be very kind of standard corrections that make a lot of sense if you are looking at those sort of things. To me, they are the most healthy types of corrections. So just saying that that gives you a frame of reference. So you know, okay, well, if it hasn't got down to the 382 even at all, then it's possibly got a little bit further to go. That's another way of putting it. Okay, Walt Disney. So Walt Disney having a very nice correction. This is a good area here again. So let's see if any of these produce. They might slow down. So we'll see if the question now is, are we going to turn around now, or we still have a bit of way to go? Bonds, now you can see starting to sell off a bit. And again, EURUSD as well, really trying to stay where it is. It really is trying to turn around and break through that. Now it has kind of failed to do that. Excuse me. So one more thing I would point out here is that bonds are not getting any love. Now, so if the market was truly in panic, we'd see bonds buying. And then one of the reasons against that would be, well, nobody thinks, you can't trust the bonds and the government backed and debt and so on and so forth, and just kind of all kinds of reasons why bonds wouldn't be valuable now. But the fact remains, actually, the world hasn't changed that much, and that when it does start to panic, we start to see bonds being bought, and they're not being bought. So inherently, or at least underlying that is that the sentiment is still, well, let's see what happens. Let's see if it recovers. It's still optimistic, believe it or not. Cryptos. Let's have a look at cryptos. So cryptos are they're all over the place, no real clear direction. But what you could say, looking very sort of simply here on the monthly, is a nice retest of the previous highs. So they could try and hold where they are and continue up. And again, this week is going to be interesting to me. The deeper the correction now, the less deep the next correction is. The longer we can have a nice run. If we have a shallow correction now, we're going to have a much bigger correction later on in the next 12 months. So that's another reason why a nice healthy correction now is better for everybody. Okay. Ethereum also trying to find some support there, so that looks good. Again, it's a minimum retracement. I would love it to come back down to those moving averages. Again, it's hinting at possible we might see this stuff continue for a little bit longer. And again, if cryptos are ultimately going to become more and more kind of the mainstay, then, they're going to have moves and pullbacks and moves and pullbacks. It's going to moves and pullbacks. It's going to happen. Cardano struggling to get outside of it, can't get above that 50 period, just can't seem to quite break through that. And let's have a look at Binance. and then we will, yeah, we're going to have to see what happens with this. So in a nice little pullback here, we're testing resistance, but still looking relatively strong for now. So that's it, ladies and gents. I'm going to leave you with this for now. Do you guys want to have a look at DJT? Shall we have a quick look at that? DJT, and then we can wrap this up. What do we want to take away from this? Bit of a bullish weekly candle, so that means that there's going to be an attempt to move a little bit higher, and there may well be. So every time it gets cheap, I do expect that there's going to be some money kind of pushing it. There's definitely motivation to keep it above certain price levels for a certain period of time, because it kind of then issues more shares, and there's a whole plan behind it to kind of effectively rinse the general shareholders. But what I was going to say is we might run into some resistance here. So this week, what I'll be looking for is a potential rejection here. I mean, it's amazing to me. Most of the market's going down. And when the market's going up, this is going down. When the market's going down, this is going up. So it's just doing its own thing. And I think we'll ultimately find out the SEC tears it open, and it's just nothing but like just ridiculous dealings. But question is, will we see a bit of a rejection? Will we find rejection at the resistance and then continue down? And if we do, we're headed down below 20. We're probably going to go and stick down below 18. And so we're likely to see that happen. So I'm just curious. I want to see what happens. So that's a crazy animal. So let's see what happens. Ladies and gentlemen, keep calm and carry on trading. Let's see what the next week brings us. And try to remember that sometimes things aren't always as bad as the media makes them out to be. Okay.